It is Friday, our favorite day of the week, because we do the Financial Fridays for you, the listener, to be more educated on your future, how to get there, what's going on in the market, and just so I can see my boys and have a conversation about money. So, anyways, gentlemen, what's up? How are you today?
Why not?
Good.
What's up, man?
Yeah,
I'm
how's
doing
you guys'
good.
weekend?
Doing good.
Is
It
there a
was good.
delay? Cool. Yeah,
It
yeah.
was all good,
So
man.
same,
Super
same,
productive.
same. Hey,
It
real quick,
might be.
I'm gonna talk about my day. My day is going good. Now, my day is going good, man. I'll be honest with you. Been in the field with clients, and then educating, all throughout the day. So it's been a very, very productive day. So, how about you, Rico?
You couldn't hear me. Can you guys hear me?
Yeah, we're good now.
Yeah, we can hear you.
But anyway, the day is good. The day has been good, just productive through things.
Good stuff. Good stuff.
Technology. Anyways, so we're gonna pull up. We're gonna pull up the first article as always. Just to kind of give you guys. So first thing foremost, um, this is just our opinions, guys. Okay. At the end of the day, we are strictly giving our opinions. We are not trying to give you any financial advice, nor are we telling you what to do with your money or what not to do with your money. Strictly, this is just, like I said, how we feel about it. And we want to give you guys our opinions. Okay. So that's first and foremost. Second, if you have questions, by all means, please add it in the comments. We're streaming on multiple platforms right now. If you guys have things that you want to talk about, you have opinions of something that we've said or opinions on the market in general, we would love to hear it. We'll put it on the screen. We'll talk about it. But the more interactive this can be, the better, because this is in turn for you in the first place. So that's why we want to make sure we're here for you guys. Okay. So the first article for today, I was up this week. That's another thing for those that you don't know. We swap every week. So every week, one of us will come up with the three articles as far as what we're going to talk about. And so that way we can, each of us has own things that we're interested in. And so we want to make sure we give you guys really kind of holistic, all inclusive feel of, the market and finances as we go through it through the weeks, right? So this week's first article is Stock Rally is a Bear Market Trap, top ranked fund managers say. So I chose this article because, as we talk about a lot in this show, you really have to be paying attention to like all those indicators, right? As far as like what's happening, because if you're looking at, say, oh, it was green today, that can really mess you up, because what's green today will be red tomorrow.
Right.
And at the end of the day, you have to kind of know why are things being green, and or why they are red. That's the other part of it too, is that just because things aren't red, just because things are red, doesn't necessarily mean it's going to continue to be like that, right? So, first sentence already kind of talks about it. Says, despite enduring a brutal start to the year for their portfolios, thanks to a surprise market rally, top ranked fund managers are sticking to the bearish views that made them winners in the 2020 stock crash. Okay. So, as many of us know, 2021, amazing.
Mhm.
2022, not so amazing. Kind of the what must go up, or what goes up must come down type thing. And so I think, in my opinion, 2023, as we've talked about kind of on the show, is there's really kind of, this is going to be a kind of what consolidation year, right? And
Mhm.
that's what a lot of the market analysts are saying as well, is that there's consolidation that has to happen, with inflation and rate hikes and things like that. We can't keep current trends moving and expect things to be okay while they're at it, right? Top tech companies are doing a lot of layoffs. That's something we talked about last week. At the end of the day, there's a lot of indicators that say that, we are not out of the storm just because we have a couple of good days, right? But Glenn, what do you think?
No, so Cam, I'm actually glad that you mentioned that, because while we've created and started this space to provide the value, I think is important for people to kind of stay in tune on what's going on in the market.
Mm,
But in essential to what you're saying, as far as when it comes to the layoffs, that stuff is really, really affecting the market, right? And so if
yeah.
you have folks that are, any of our listeners, if you are, heavy investors, or, maybe you may not even be a heavy investor, but you're playing around in the stock market, like it's important to actually know this stuff, right? And be in tune with the layoffs. Cam, you had mentioned about what's green today may not be green tomorrow. Same. And so as I was reading this article, that's kind of the thing that really stood out to me, was what you just said with the green and red, right? Just because things seem to be going okay in the first quarter of Q1, right? Just kind of looking at the trend of things, is super, super important for individuals to see. When you talk about, in that particular paragraph, it talks about the S&P, 500, right? Like I said, just many things to pay attention to. I think what it said that this week was the first week of where it was kind of down since we've jumped into 2023.
This is one of the worst weeks. Yes, this is the worst week of the year.
So again, like I said, it just goes back to what you said about the green and the red. And so I'm still excited to see what the market continues to do. I've been really, really heavy on looking at this AI stuff. Like really, really big. And so, while Rico comes back in, I want to share something tied into the article, tied into the AI space. I was playing a game with one of my younger boys today, and literally it was just like, hey, you can play the game like one-on-one, or you can play or with another player, or you can play it versus AI. And as soon as I seen that, I started laughing. I was like, here we go. And then on the flip side of that is just kind of being careful of AI doing certain, taking over certain roles. But anyway, back to the article, to kind of circle it back. Like I said, this article is very interesting, man. So like I said, green, red, green, red, green, red, green, red.
Rico, you back? No.
Oh, okay.
Okay.
All good.
All right. So one of the things, as far as we talked about kind of that trap, right? And so in the article, it even says, says Mullenkamp, skeptical peers, James Abbott also sees the equity rally as nothing more than a bear trap.
Mm-hmm.
Because like we talked about, there's the rally, right? There's like, oh, it's going up. So, one of the things that I used to take part in during COVID, because I was bored, right? I have nothing else to do. The markets were great. Was I used to do like penny stocks. So that's something that you see a lot in like the penny stock rally. It's like someone says like, oh, this stock's going to hit. It's only a penny right now. It's going to go to 10, pennies though. And so you see this giant rally. But then what happened is whoever the person was that was pushing that stock waited till everybody else got into it, pushed it to 10, and then they sold. Right.
Mm-hmm.
And so those are those traps that's what it reminds me of when we talk about like those traps that you might be coming into, right? Is pay attention to all of the indicators and what's going around, behind the scenes and so on and so forth. One of the other things they talked about, let's see here. So for fund managers who took on one last year, thanks to defensive positioning, the decision to hold on isn't without pain, especially at a time when virtually all of 2022's trends have reversed.
Mm-hmm.
Right?
Yep.
What goes up must come down.
Wow. Absolutely.
So before we move on to the next article, Glenn, any other words about this particular one?
No, I mean, like I said, just kind of going back to, I think that the statement that you really highlighted really hit the mark. But and kind of actually tying back into the title of the stock rally as a bear market trap, top rated fund managers say. Guys, if you are new to learning about finances, if you are seasoned into the money game, again, I want to encourage you to continue to do your due diligence by doing the research and keeping up, right? Because what's happening this first quarter, what's going to happen the next quarter, what's going to happen the latter part of 2023 is going to affect so many people around the world. So like I said, in these articles, Cam, I appreciate you highlighting and picking this one, man. Good job.
Thank you. I try. But yeah, and like Glenn said, the whole point of this is education piece, right? That's why we do it, because all of us at one point didn't have the education that we do when it comes to finances, and it was, podcasts, reading, YouTube videos, a mentor, all those types of things, that really kind of helped us learn this avenue, as far as information is concerned. And we want to help you guys with that as well. Hopefully we can spark some interest when it comes to finances and what's going on, so that you can be prepared as you go. And even if you have someone managing your funds and your money and things like that, you can still be prepared to have like really good conversation and questions for them about where your money's at and where your money's going. Okay.
Mm-hmm.
So the next article is going to be so this one's going to change up the conversation a little bit. This one Rico actually brought to the table the other day, because when we're talking about finances, when we're talking about the markets and things of that nature, we're also talking about how are you protecting yourself, right? How are you protecting your estate? How are you protecting your family? How responsible are you being when with this knowledge that you have, from the Financial Friday podcast, as far as what you're going to do to protect what you've built. And so this article was about Michael Jackson's estate, RIP, the king of pop. But it talked about what's happening with his money, because Michael didn't have a proper estate put into place when he passed away. So I'm not sure if Rico, if not working, if not, Glenn, I'd love to know your opinions on this.
Yeah. So this one was a good read, and I appreciate Rico, if you can hear me. I know you're having technical difficulties, but I appreciate reading this. Number one, because Michael, MJ's kids are like second cousins to my wife's family, and so anything regarding MJ,
okay.
I'd be too.
Some Jacksons.
So I was actually, Jackson's in the house. I was actually sharing this with Tegan not too long ago. But something you said, Cam, as far as Michael Jackson not having, his kind of the documents aligned, right? And so this is, again, another educational piece for folks when it comes to, when you have assets or you have, certain things that you're looking to pass down to your generations, it's important to have things like properly in alignment. And one of the things I appreciate about Rico is when he does trainings in the agency, when it comes to proper alignment, when it comes to trust, when it comes to LLCs and business structuring and all that, that's something that I've been grateful to be able to pick his brain on. And so regarding this particular article, man, it was very, very interesting to know that someone at that caliber, who had lawyers, who had people in the corner, not having things to be able to help properly align them up. You know what I'm saying? And so I'm trying to find something specifically that stood out to me earlier. It talked about they're publishing with the mask off rapper selling. Man, where was it at? I wanted to share it with you. Anyway, one of the things I want to highlight is that it talked about the Jackson 5, and throughout his entire solo career, the label entered into a joint venture with the Remember the Time artist in '95, of which Jackson owned a 50% stake, right? So in 2016, 7 years after Jackson's death, Sony paid the Jackson estate $750 million for his stake in the collaboration, and now appears to be circling back for more ownership. That stood out to me because when I was reading more and more of it, I was just like, man, it's unfortunate that some people that are in the industry, in the music industry specifically, are greedy.
Yeah.
And I was just like, and again, seeing how people put a value over you or devalue.
Yep.
That was, like I said, that was kind of really stood out to me in the actual article itself. This was a good read, tying into what the market is doing and what's going on in the market itself.
Yeah. I think one of the things is like people don't understand a lot of times, especially once you're at that level, like it's like they do understand, but they don't, is how important your name is. Like,
Yes.
you know what I'm saying? Like like when you're reading this article, it literally says that not only are they looking for the rest of the money when it comes to the interest in his music, they're talking about a Broadway show. They talk about the biopic Michael. So I mean, they're, you know, in death, this man is still going to make them, you know, millions, potentially billions of dollars as it goes on, strictly because of what his name is. And have their, you know, like you said, he had so many resources available to him, and yet his name, probably one of the most important things, wasn't protected in a way where it was going to continue to help his family for the rest of their lives, right?
Yeah.
And so that is something I think that's important, is, you know, especially with a lot of the changes that have been happening as far as taxes and stuff as well, you know, Secure Act 2.0, things of that nature. It's more and more important to understand that it's no longer just about creating the nest egg. It's about protecting the nest egg. And then how much of it are you actually going to be able to put down to the generations past you, right? Because your one thing that you built with your knowledge, your work, your dedication, could very well be disbanded because it was not written up properly for futures to come.
Yeah. And like you just said, that is probably the number one reason why I appreciate this read, because it was a reminder that, you know, whether you have folks that are deemed successful in whatever that regard is, or whether they're just kind of middle class America,
Yeah.
have a certain amount of money in their retirement, like things like this can still happen to the average Joe, and so
Yeah.
that's why I'm grateful that we're kind of highlighting this particular article.
And I mean, and we haven't talked about it on the show, but Offset was the same thing.
Yeah.
You know, when he passed away, it was the same thing. They were like, he has this estate that we now have to figure out what's going to happen with the estate, right? And that would suck, you know, for anybody, for their hard work to all of a sudden be up to legalities, right?
Yeah. 100%. 100%.
Okay, so next article for the day.
Shout out to Rico for selecting that article.
Yeah, that was a good one. We want, if there's anything we want to do, we want to make sure we are really giving like an entire like 5,000 foot view of everything, right? So, you know, we talk a lot about the market, we talk a lot about you know, what's happening as far as company dynamics, unemployment, and things like that, but we want to give you guys an entire view of, you know, finance and what we believe are some of the best steps you can take to not only be successful, but to allow realistically your bloodline to remain successful through all of it, right? Because it's great. It would be great for you to be successful now, but it would be even more heartbreaking if it stopped with just you and did not continue, you know, down the line.
Yeah.
So
100%.
the third article we have for today, as you guys know, we're fans of Yahoo Finance. We feel like they're the most impartial. So so stock markets news today: stocks close mixed, end week with losses. So this falls really in line, kind of, Glenn, with what you were saying, is that, you know, this was one of the worst weeks that we've had thus far this year. You know, granted, perspective wise, it is only, you know, what, the second week of February. So we're 6 weeks into the year. But that being said, you know, this is usually a time when the market is somewhat up. So it kind of begs the question of what are the indicators of what's to come, right? Granted, there's a lot of things that have to fall out. You know, I'm sure, you know, non-politically speaking, the whole China balloon thing, that I'm sure that was an indicator. You know, some of the trade things that are going on. You know, one of the articles that we didn't talk about, but was said was, you know, Russia when it comes to oil. You know, and so there's a lot of moving parts right now when it comes to the market and how it's affecting what's really going on. And that's when we say that you have to really kind of pay attention. That's what we're talking about is, you know, you can't just pay attention to tech, because when tech might be doing bad, you know, commodities or other things might be doing good, and vice versa, or they might all be doing bad. So then it's like, okay, why are they all doing bad? And so that's why it's really important, and we talk about on our show, is really to understand you know, what are the ins and outs? What are the side views? What are the front views? What are the back views? Right.
Right.
But yeah, so what do you feel about this article, Glenn?
Yeah, so it was a lot that I kind of took away. It kind of took me back to the pandemic, like when it was
Yeah.
happening, and I was thinking about the Uber and Lyft and all that. I remember when like that where I feel like when it became popular, I was like, man, like I should invest in some Lyft. Or I should invest in
For
um, but,
sure.
but anyway, so in the article, it spoke specifically on Lyft and the stock and how it tumbled more than 30%, right?
Mhm.
It said Lyft stock tumbled more than 30% after the ride share company reported first quarter earnings.
Yep.
Right, that came in at $975 million, which was below consensus expectations of a little over $1 billion. And
Mhm.
right, so when I first read that, I was just like, man, it's crazy. But again, there's a lot of pieces when it comes to the
Yeah.
stock market, when it comes to the money game and different things like that. Is like you said, when one area may be up, another area may be down because we're constantly evolving with things. Where taxis were the popular thing at one point, right? I might be kind of dating myself a little bit, but taxis were very popular, right? Fast forward, you have Uber and Lyft to kind of take you from destination from point A to point B. Expedia, another platform where it's geared towards having a hub in a sense where you can kind of go, but there's so many different things that you can access for travel platforms, right? And so Expedia, their shares fell, nearly 9%, 9% as well, right? And so I found those two things very interesting in that article. That kind of stood out to me based off of the title itself. So this was another good read, man. Um, Again, stocks going up, stocks going down. They're being in the green, them being in the red, and so yeah, this was another good read.
Mhm. So one of the things that it talks about is it says on the macro front, the University of Michigan's Consumer Sentiment Index rose 66.4 in February, raising it to the highest level since January of 2021. And the results are higher than January's reading of 64.9. So those that don't know, and I pulled this up so I can give you the exact definition, is the U.S. Index of Consumer Sentiment, as provided by the University of Michigan, tracks consumer sentiment in the U.S. based on surveys on random samples of U.S. households. The index aids in measuring consumer sentiments in personal finances, business conditions, among other topics. Historically, the index displays pessimism in consumers' confidence during recessionary periods and increased consumer confidence in expansionary periods. Holy cow, that was like 13 $10 words all at once. so so
100%.
what's that?
I said 100%.
I was like, man, I had my public school, I had to make it work in that moment. So what that's saying is that that it's the highest in February that it's been in almost 2 years, right? And that is the confidence that it displays the confidence people have in what's going on in the US right now. It talks about how confident are people not only in the finances but the businesses that are out there currently, right? um and that's one of the things that it comes down to and that's once again another one of those market correlated factors. How
Mhm.
confident are people in the market or what's going on in the US to the point where they actually feel the need or want
Right.
to invest in it?
Yeah.
I'm gonna knock my
Yes.
computer over.
Yeah.
um like if we think what, let's say March, April 2021,
Mhm.
what that was the largest accumulation of Robinhood accounts that there ever was, because all of a sudden everybody and their mom was like, the market's amazing right now.
Yeah.
Let's
Yeah.
all get Robinhood accounts and be billionaires.
Yeah. I remember being at work and I was still, military or whatever at the time, and like every airman on the floor like was like, "Hey, I'm setting up a Robinhood account." It was crazy. Anyway.
No, I mean, no, you're right though. And that's the thing is, um, that's like one of those things where they talk about, because of the Robin Hoods and because of the Thinkorswims and the things of that nature, is like the I won't say the old ways of reading the market are gone, but they have changed, right? Because so many people have access now to the market on an instantaneous basis, and they can change it.
Yeah.
So that's why that's why it's even more important for the average person to be more and more educated, because the average person is more and more the one that's investing in the market just by themselves.
Yeah.
Especially when it comes to, like, people don't want to pay for people to manage their money anymore. A lot of people just want to do it themselves with how much information there is out there on the internet, right? YouTube University and such. And so those are the things that they're looking at.
Can we pause on that real quick? Because I want to say to that person, if that's you, right, it still pays to have a professional, right? Someone who is a subject matter expert in that field. It still pays to have them in your side pocket or in your phone book. Or again, I'm dating myself, but not your phone book, in your cell phone.
In your Rolodex.
Because again, that's a skill set. While again, that's their profession. So I want to put that plug out there. It's always good to know someone or have that someone in your circle, because you only know what you know. You only have a certain limit of resources that are available. While resources are out there, I've learned in this last 365 days that there are certain resources that are not accessible to everyone, right?
Yeah.
So
for sure.
I wanted to just kind of put that out there.
No, you're right. And that's why and that's why we are now using this resource to make sure we can get it to, everybody and anybody, right? But that's all we had for today. Or that's all I got, Glenn, unless you got something else. I will tell you guys, I am excited about it. There's a background experiment that we've been rolling with, and we're excited about, and really kind of taking what we talked to you guys about and seeing where it goes. And we're excited about the next 6 months when it comes to, bringing this to you guys every Friday, talking about what the market's doing. This excites us. Obviously, we talk about this all week. So, we be busy, but these are the things that interest us, and we hope that it can bring some type of knowledge to you guys.
For sure. And I'll just end it off with saying, Rico, I appreciate you being our model for the day. Again, I know this. Brother, we appreciate you for everything that you do, the value that you do bring. I'm excited. Guys, I know you guys hear our thoughts, our opinions. Again, we've partly created this platform to also hear your thoughts. Like Cameron mentioned in the beginning, just tap in, dive in, write your thoughts. We'll have an open dialogue. If there's a topic that that's kind of out there that stands true to you, hey, bring it to our attention. We'd love to kind of digest it and converse on it. But without that being said, that's all we have.
We'll see you guys later.